Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafi Baijan, currency analyst, and here with me is our chief economist, Michalis Floreniadis. So, Michalis, it's been a rather quiet week, although we've had some developments on the tax front in the United States. That's been having quite a big impact on the markets. Can you tell us a little bit more about what's been driving the currencies this week?
I think it was a relatively quiet week. We didn't have any major development. What the market is, of course, watching is whether the US is going to get a new tax package, which is going to reduce taxes. And we are watching the deliberations whether the Congress, together with the White House, the Trump White House, is going to get a package passed and implemented. So, of course, we have this give and take before every major piece of legislation. We haven't had a tax reform in the United States for more than 30 years, I think. So this is quite an ambitious task, and obviously it affects quite a lot of different interest groups which are fighting to retain their previous advantages, let's say. But I think that the fact that we have not seen quicker progress hurt the dollar a little bit. I think on balance, the market is still expecting a tax package to happen, to take place, but there is this uncertainty given the previous record of the Trump administration not to have any major legislative victories, and this has its own cost against the dollar. Not a major cost, let's say around 0.5% down with the other majors, like normal fluctuations, but it was a little bit under pressure. And with that, can we move on to next week? Rafi, what do you think that the market is going to be focusing on? And especially, let's start with the UK. I understand we have a lot of important data regarding the UK, which is also a crucial point with regard to Brexit, which is another key that we have to watch. And of course, what the Bank of England is going to think about the data.
That's right. We've got quite a lot of UK data next week. Starting with inflation. UK inflation is expected to rise to 3.1% in October. That's just about the Bank of England's upper limit of 3%. So this would mean that the Bank of England Governor Mark Carney would have to write a letter to the Chancellor of the Exchequer to explain why inflation has overshot the target. We also have unemployment figures the following day. They're expected to show unemployment holding steady in the UK near 4-decade lows. We're not likely to see much of a change in wage growth either. The bigger concern could be the retail sales numbers. They're expected to show flat growth over the month in October, and this could mean that the year-on-year rate would turn negative for the first time since 2013. So this might concern the Bank of England, given that they just raised rates by 0.25 percentage points, and it would also reinforce expectations that this was one and done deal by the bank, and they're not likely to raise rates, at least not in the foreseeable future.
So we are getting data, but not much impact for the Bank of England. What about the US data, and what is that going to mean for the Fed? Or are we just going to have a Fed rate hike in December no matter what, do you think?
Well, I think it's pretty much been priced in that we will see a December rate hike by the Fed. So this would mean that we're not likely to see too much of a reaction by US data next week. Yes, we'll also see inflation and retail sales figures next week. We saw very strong growth in retail sales in the US in September. This will likely moderate in October. And the headline CPI rate, which the Fed doesn't really look at this too closely, that's expected to stay unchanged at 1.7%. So it will probably see some movements in the dollar, but given the fact that rate hike is on the cards already for December, potentially it might not be taken too significantly by traders.
So probably traders are still going to be watching what is going to happen with the tax plan and any developments there. Maybe they want a vote before Thanksgiving, which is the week after next week. So that will be interesting. So finally, well, another country that we're not going to see much change in its monetary policy is Japan, but we are expecting Japanese GDP. I think so. What is happening there? What is happening with that
Well, this
particular
can be
economy?
quite significant because Japan will likely post its seventh consecutive quarter of uninterrupted growth. This would be the longest streak of growth since the 1999-2001, and this would be quite symbolic, especially now that Shinzo Abe has won another term in office, and he will possibly reappoint Bank of Japan Governor Haruki Kuroda for another term in 2018. And this means that even though we're seeing, strongest growth in years in Japan, monetary policy in Japan will likely stay very loose for the foreseeable future, as inflation in Japan we know is still below 1%, and the yen will also likely stay weak for some time to come.
All right. Well, thank you very much, Rafi, for your input. Thank you, everyone, for watching, and have a great day.